AgCountry offers a wide range of internal growth. If you have a goal in mind and you put your mind to it, your successes can be endless.
There are so many jobs within this company that you can rotate into.
I like challenges. AgCountry gives me challenges.
Yeah, AgCountry is a great place to work. There's plenty of flexibility. You're never tied to your desk. There's a team here that is always there for you.
Yeah, grab your role and run with it. And always be aware of the opportunities because they're in front of you.
Good morning, everyone. Welcome to Big Iron and the Red River Farm Network building. Appreciate you coming to attend. My name is Keith Wilson. I'm the RVP of Insurance for AgCountry. I'm here with Joel and Logan. We're going to talk to you about area plans and just where that would be a fit for your operation. So we'll get started with some introductions. First, we'll introduce Logan. So Logan.
Good morning, everybody. My name is Logan Finkston. I'm the insurance specialist out of Fergus Falls. Been with AgCountry about 5.5 years and in the insurance world for about 9.
Perfect. Thanks, Logan. Joel Lisney, insurance specialist out of Wahpeton. I've been with AgCountry a little over, getting close to 9.5 years myself. And we're just going to talk to you about some things that we think should be on your radar for this year. And kind of a theme for what's going on today. This is going to be one smoking presentation. You know that? Get it? Okay, it's smoky outside. All right.
Tough crowd.
That's supposed
Tough
to be
crowd.
an icebreaker, you guys. Okay, come on now. Hey, thank you. All right, so we're going to jump into this, you guys. We're going to talk to you today about your traditional plan of insurance, but then we're also going to hit on something that's really starting to take some traction in our territories, and those are area plans. That would be your SCOs, your supplemental coverage option, your enhanced coverage option, ECO, and then also margin protection. Okay. What I want to do is I want to just kind of set the bar to start, though. Most of us, I would say, in our area are probably in that high 90% are just used to traditional plans of insurance. You know, you buy you meet with your insurance agent in, between the months of January and March, and you kind of set your coverages for the year. You kind of know what your revenue's going to do. Base prices are set at that time, and that's kind of where you're going to start this thing. Well, what we're going to do first is I'm going to just I want to lay a line here. So we're going to use corn as an example. Okay. So for your traditional plan, and these are numbers I just want you to we're going to just kind of flow through the entire program here, okay? 150 bushel APH corn, okay? Guy takes 75%, probably the most common coverage in our area.
It is the most common,
Yep, so gives you 112.5 bushel guarantee, okay? Well, this year, we set a base price for corn at $4.66, okay? What does that give you? That gives you $524 worth of coverage on that corn crop, okay?
So Joel, in most cases, would that cover cost of production?
I would tell you in a year like this, Keith, it's probably not enough.
No.
You know that? And that's a great segue that Keith just came into, because I pulled the numbers from last year, and we had a $591 base price in 2023. Well, all of a sudden, that's $664 worth of coverage, getting a little closer to break even. Okay?
Yeah, and most guys are paying $750, $800?
$750 is a common number for break even in our territory, I know. But I mean, just in the 1 year from 23 to 24, we've reduced the amount of coverage that you're purchasing by $140. 1 year, okay? So this tells you why we're really wanting to kind of present this stuff to you guys today, because there are other plans of insurance that you can stack on top of your coverage, and we're going to really we're not going to get too far into the weeds with this, but we just want to really let you guys know, because there are some dates out here, Logan, that are kind of looming that we need to be really cognizant of if you're going to be interested in an area plan of insurance, okay?
And before we dive into area plans, Joel, so you said 75% is your most common, right?
Right on the money, yep.
Do you ever have the area plan discussion maybe they're not interested, and maybe they bump up to 80, 85.
Yep, and that's a great conversation, because these area plans, you know, I mean, it's not gonna be for everybody, but I think it's something, especially Logan's gonna have a slide later in the presentation that I think is gonna turn some eyes, okay? But I think with the way the pricing is right now, these plans of insurance have really got some teeth to them, where I think they can add a lot of revenue to your existing policies. And again, we're talking about stacking on top of your multi-peril, okay? So it's just another tool in the toolbox to really consider. But yeah, it's a great tool to kind of add on to that. You guys are used to your revenue protections, and you're used to your yield protections. You know, revenue obviously is going to take your base price into consideration and a harvest price, okay? There are people that with certain crops, they just decide, I'm going to take the base price and that's it, okay? That's what they call a yield protection policy, okay?
Which are rare for us.
Which are rare. We don't see a lot of it. I mean, if anything, we saw, you know, maybe barley.
Oh,
You
sure.
would see some of that with the malting barley.
Yep.
But we don't see a lot of the yield protection, just because when you have a traditional product or a traditional plan like revenue protection, especially in a year like this,
Yeah,
we
price
saw in wheat where you went up, what was it, 18.1% in the guarantees of our producers because of the price drop. Well, if you have a yield protection plan, honestly, you get none of that benefit. Your guarantee when you set your your coverage at the beginning of the year is your guarantee. With the revenue protection product, I mean, that's what's been so popular about it with us around here is just because you've got that price protection. And price protection is a big thing that Logan and I are really going to try and hammer on with these area plans of coverage, okay? So I'm going to start with the first layer, okay? So you've got your base policy. Remember, we've got our multi-peril base policy here. Well, the next thing you can stack on that next Lego block you can put on it is what they call supplemental coverage option, SCO, okay? And how this thing works is, again, remember your multi-peril policy takes into consideration your farm, okay? That's huge to remember this, okay? Because area plans take into consideration the county, okay? Your farm obviously plays a big part of going into those county yields, but obviously if you have a loss and the county doesn't have a loss, an area plan isn't going to pay out for you. But we'll get into the weeds a little bit more on it, where price comes into play, where county plans are really starting to catch some traction.
Yep.
So how a SCO works, you guys, is you've got a 75% policy, okay? This SCO, supplemental coverage option, will cover you up to 86%, okay? So that's that 9% band that you're kind of stacking on. It's another Lego block, putting on top of your multi-peril policy in case the yields in the county drop below 86%, they're going to trigger a payment for you from the county level, okay?
And those yields come from where?
They come from RMA. Yep.
So no more NAS yields, we're using RMA yields?
No.
Okay.
The NAS thing, and that's probably good, because all this crop insurance information that you guys report on an annual basis gets compiled with RMA, and it's really a much more accurate way to kind of know where your counties are sitting.
Sure.
I mean,
So these yields at SCO and then ECO and margin, the yields that are set, they're not just some random number that gets pulled out of a hat. I mean, these are
Spot on,
historical
Logan.
yields that are produced in this county.
Yep, spot on. One thing you gotta, again, we're gonna harp on this and we're gonna say it 1,000 times. These are area plans of insurance, okay? So what that just means is, again, you might have a loss on your farm, but if the county per se, and we're gonna get into this with hail insurance a little bit later, but your farm might not have a loss, but the county might have a loss. I mean, it could work both ways here. So one of the caveats with supplemental coverage option, and again, this is just for SCO, you can't be enrolled in our county, okay? So when you sign up for your programs every year, if you decide you're gonna take SCO, make sure you select PLC for that particular crop, Okay, that's huge because otherwise it will kick you out of your SEO selection. So, and again, it's got a great price premium subsidy on it at 65%. So, I mean, it's got a nice little discount for you if you decide you want to be involved in that.
And Joel, we kind of touched on this, but why are indemnities paid out the following year?
Well, okay, so great question, Keith. Okay, so let's kind of take this from beginning to end. Okay, you're going to set your coverage like you do on your multi-peril policy by March 15th. You're going to go through the season. You got to get those yields reported. Well, when do you have reporting deadline for
April 29th.
April 29th, right. So what's got to happen is all those yields have to flow into RMA, and then once they get that data into RMA, I think, what is it, Logan, June 15th?
Yeah, June 15th for corn and beans.
Yep,
so,
is when an actual payment gets,
yeah, so you're going to make up your mind in March.
yep,
You're going to pay your premium in September when you pay the rest of your multi-peril. And you're going to know the fall price because these policies use the exact same March and fall price that your base 75% revenue protection uses. So you're going to know where that price is come December, but you're not going to know what the final county yield is till April. So it is about a 15-month turnaround
Yep.
before you would collect an indemnity on this policy.
and you, like Logan said, okay, your billing is still gonna come with your regular multi-peril policy. So the one thing you gotta take into consideration when you do area plans, and it doesn't matter which one it is, you're gonna pay the bill up front, and you're not gonna know a while. You're gonna have to sit on your hands for a while to find out if you're gonna actually get into a payment. So this is the first block we're talking about, is supplemental coverage option. I'm gonna hand the clicker over to Logan, and he's gonna talk to you about what I think is gonna be, you guys, this has got some teeth to it this year, so.
Good news.
Yeah, very much so.
All right, thanks, Joel. So if you understood what Joel talked about in SEO, pretty much the exact same thing here on ECO, except with just a couple different twists and turns to it. So county policies, there's been a lot of, say, different opinions.
Yep.
Over the last few years. And I would say when we first started talking about these 4 or 5 years ago, I probably had the opinion that I'd rather just buy up on my revenue protection and not base my coverage on how the county's gonna do. But with conversations with Joel, Keith, customers, there actually is a really good place for these kind of policies. Like I got a guy, I think 2 years ago, he bought this policy for the first time. And every time we did his renewal, it was 70% on the corn, 70% on the beans. That's where his max subsidy is on the revenue protection. He didn't want to spend any more. So I honestly wasn't going to talk about it with him, but figured I'd bring it up. And all of a sudden that renewal turned into another hour-long conversation because at that time, the spring price for corn was $5.91. This is for 23. And the spring price for beans was $13.76. But if you guys remember last fall, corn came in at $4.88, which was a 21% price drop, and beans came in at $12.84, which was a 7% price drop. So this policy, he, on his corn, I think got about $100 from the ECO coverage.
Yep.
And then, then 63 on his beans. And in this scenario, with how much the price, like corn, for example, dropped 21%, his base policy still didn't pay him a loss where the ECO did.
Okay, so let's just circle back on that real quick again. So kind of what we were talking about before. You got your base policy. Okay, this is what I'm insured for, but all of a sudden, because we had such a dramatic drop in price, it triggered a payment even if you weren't getting a payment on your farm.
Correct, yep, because like when I said ECO is a lot like SEO. So SEO goes from your multi-peril. So if we're using 25 or 75, it covers you from 75 to 86%. Where ECO covers you from either, if you look at that first bullet, 86 to 90 or 86 to 95%. Everybody that I've talked to and everybody that's bought it, we don't even have the 90% discussion. Either buy the whole thing or you don't.
Right. Yep.
So everybody that we've dealt with or I've dealt with has bought 95%. So these policies are county-based, but I like to say they're about 98% county. So everybody who collects on it is going to collect on the same two numbers, the price drop and how the county yield performs.
Yep.
The difference is if I have 175 bushel APH, Joel's got 150 bushel APH, I'm going to collect a higher payment because my APH is higher.
Yep, yep. So I got to ask you this, Logan. You have to keep track of any of that stuff?
You don't.
I mean, this is all data that our individual producers are submitting to their agents, who then are submitting them to RMA. So what that just tells you is, you just kind of, honestly, there's nothing that you have to report to know if you're in a claim. RMA will release these yields, they'll release their, what the prices came in at, what the drop was, and we actually get grids, you know, within AgCountry
Right.
that'll tell each county. And if you have the opportunity, I don't know if that's out on the RMA website or what it is, but it'll tell you what counties maxed out on payments. And these numbers, like Logan was saying, on ECO, you said another $100 of revenue? Yep. Okay, so like I was telling you before, base price $524. All of a sudden, I'm on the outside looking in, and I didn't get a dime. So at least if you're buying with an area-based coverage like an ECO, at least you got some revenue out of it, and yet you still have your bushels. So, yep.
So is there a payout factor somewhere involved in these plans?
Yep, there is. So it's called a production factor. You can either buy 100% or down to 50. So what that does is we've had, like this year, we had a lot more interest in it than we did a year ago, and that
Right.
kind of surprised me because I thought at 591, more people would have been worried about protecting that $6 price.
Yep.
But I actually had a conversation with a guy this year, and I made that comment. And his comment to me was, well, at 591, we could afford to make a mistake. At 466,
That's
we can't.
a great comment. Yep.
So a lot of people, like this is new. I mean, these are newer policies. It's a lot of people don't fully understand how they work. So that production factor comes into play that Keith was talking about. So let's say, like last year, I think corn was roughly $24, $25 an acre if you were to buy ECO. What that production factor does is essentially you buy half the dollars. You still have that 5% deductible, you're just buying half the policy. So instead of $24, $25, you're looking at $12 and a half bucks an acre. You still have the 5% deductible, you just have half the coverage.
See, and I like that. I'm glad you brought that up, Keith, because honestly, if you're on the fence about doing something like this, obviously, like Logan's saying, with the protection factor, you're only going to get half of that indemnity, but all of a sudden, you just kind of threw a line in the water. You know, I might want to jig this thing a little bit and see if it fits my operation. If it doesn't, at least you don't have that much skin in the game as compared to if you just went all in. So.
Yeah, so like I said, there's a couple differences between ECO and SCO. The deductible is one. You don't need to purchase SCO to have ECO. You can buy ECO, have that gap, and then get down to your 75%. That third bullet, you can have AgCountry. It doesn't matter what program you pick. You can buy ECO, and it doesn't matter. And then like that last bullet, indemnities are going to be paid out end of June the following crop year. So the big thing about...
I was going to do the drum roll, man. Sorry. This is the big slide right here. This is a big deal, you guys.
So the big change this year for ECO, the last few years it's been subsidized at 44%. Well, this year that subsidy just got bumped up to 65. So if you look here, this is just an example. So last year, if ECO was running $30 at a 44% subsidy, your premium was $16.80. This year at a 65% subsidy, you're only paying $10.50.
Okay. And this is a premium on top of your multi-peril, correct?
Correct, yep.
Okay.
So this is additional to what your 75%, 70%, whatever you may cover. This is additional, this is on top of what you're currently paying.
That was, in our market, that was the catch point right there, because all of a sudden you're spending $25 on corn premiums at 75% enterprise, and all of a sudden you're going to tell me I need to spend another $16 to get this. Guys are going to go, yeah, maybe I just, and this is a true conversation. Maybe I just up the coverage that I have on my own personal plan. And there's nothing wrong with that, you guys. I know there's been talk, and I don't know where it's at within legislation, that they're talking about increasing the subsidies on the higher coverage levels. And so, I mean, that might have some doings in the future, but this is a big deal because all of a sudden you just cheapen that and you've created less risk for that operation because you're covering at such a high level.
Yeah, and like we said, we're not trying to push this on anybody. We're just trying to let everybody know what tools are out there to protect the price in this declining environment we're in. And I've had guys where I've met with them, and the conversation ends with their 75% enough to cover their break even. And they don't buy it. Great, your insurance is doing what it's supposed to do.
Yep.
So guys, talking about a little extra premium on ECO or SCO, where does hail insurance fit in on this?
Oh boy, this is a great question. Should we defer that until the grid?
Sure.
So,
Okay.
Whatever you guys want to do. You run the show.
Yeah, Keith kind of stole our thunder a little bit here, but.
okay, so this is more of a visual. If you look at that little, I don't know if you want to call it bar graph or whatever on the right. So the big green bar, that's your revenue protection. Okay, that's your base 75%, your multi-peril, the policy you buy every year. That next little band is going to be that SCO that Joel talked about. Okay, so that covers you to 86%. The band following that is ECO. That's going to be your 86 to 90 or your 86 to 95%, whatever you decide. And then that red area, that's going to be your 5% deductible.
Okay.
And like we said in the slide before, you can buy your revenue protection. You can skip SCO and just kind of have that black hole area and then put ECO on top of that.
And just, you know, as Logan and I were kind of preparing for this, it's really crucial that you understand if you do decide to buy an ECO product, you skip SCO and you still have your base plan, you do, like he called it, you got kind of a dark hole there where you could not, you might be in that gray area where you might not receive a payment.
Right.
So just transparency from our part when you go into these area plans. Like I said, it's like Jenga almost. I mean, you're pulling out that middle one. And so, you know, it's just be aware of that when you're going into it. So,
yeah, so right here, this chart, it's a tool that AgCountry has, and what it does is it takes your history, your farm numbers, and it tracks how you correlate with the county. So if you look at the bottom line, the dark blue one, that's the county yield. The light blue is this producer's yields and how he tracks with the county. So if you look at it, the correlation, 86% of the time, he's tracking with the county. And why is that important? Well, with these being county plans or area plans, if you have a bad year, the same year that the county has a bad year, well, that's going to be a year when you're going to need this extra insurance.
Yep.
And a big question I get a lot of times is, like Otter Tail County, for example, the projected yield's 165. So they're saying Otter Tail County is going to go 165 bushel. Well, I got guys with 190, 200 bushel APHs, and like, well, why should I buy it if I'm 30, 40 bushels over what the county's projected? Well, if you look at it this way, just look at the county as one giant enterprise unit. So I might have a 175 bushel crop. The county's projected to go 150. Well, I'm 25 bushels above. Joel goes 125. There's your projected yield for the county.
Right.
Well, and a lot of guys like looking at this just to see how they compare to their neighbors, right?
Yep, spot on. And I didn't mean to push you off on that question, Keith. This is where I think, as Logan and I were preparing for this, the hail question came up. Okay. Does it make sense? Well, if I'm going to spend extra premium on ECO, I mean, okay, so I'm buying additional insurance. I mean, am I needing to pull back from something else? No. Okay. This is, again, county-based coverage. If you have, and we had it this year, I had an operation that got hit 3 times with hail this year. That doesn't, I mean, that's their individual farm getting hit by that peril. Thank goodness they had hail insurance. So I would tell you, I think Logan, Keith, you would echo it, don't skimp on your hail insurance if you take it, because again, that covers for that particular peril. And it might not have any bearing on what's going on in the county. Because
with county plans, you can have a bad year, or you could collect on your revenue protection, but the county still does fine and you don't collect on this. So skipping out on the hail to buy a county plan, I would advise not to.
Yep.
I mean, I
agree.
get the
Yep.
I get the thought process on taking $20 from your hail and buying this, but I would keep the hail to protect your operation versus Go County.
Yep. I spot on. Totally agree. Yep.
So margin, it's a little more complex than ECO and SCO, but we're going to talk about it a little bit. So right now is when you buy margin. You buy it in September. The sales closing date September 30th, I believe.
Correct. Yep.
It's a plan out there that kind of helps protect against inputs. So right now, so August 15th is when they started tracking the price. So that harvest price is actually set in September versus being set in March. So this Friday is when the prices for corn and beans are going to be set. So right now, from August 15th to today, corn's tracking at $4.39. And they use this, or they base this off December 25 futures. So if you look at December 25, that's sitting right now at $4.45. So I'd say by the end of the week, corn it'll be within a penny of $4.39 would be my guess. Beans are sitting at $10.40. If you look out to November of next year, they're sitting at $10.53. So margin is also subsidized. It also carries a 5% deductible, but it's only subsidized at 44%. In years past, so this year it's going to be a harder conversation to have, or a harder decision to make, would probably be a better way to put it. Just because you're buying ECO, ECO's on sale at 65%.
Yep.
Now, I still think the conversations need to be had because corn at 440, a lot better than where we're sitting right now.
Right.
406, and where we're going to be at in February when the RP price is determined.
Right.
Right.
Yeah, so if you don't think, I mean, come March 1 when the multi-peril prices are set, if you don't think 440 is going to be there, then maybe this is a good option to have. But this, like ECO, it's based on price and based on the county yield, where margin brings in urea, DAP, potash, diesel, interest. So if your margin shrinks with all these calculations in there, you'll collect a payment. So it acts a lot like ECO, just with a few more moving parts.
So really what you're saying with margin, declining prices, input costs are going up,
That's
chance of a trigger, probably pretty good,
Right.
So,
I mean, I had a guy last year buy it. Last September, he locked in corn at 509. Well, right now for this December, I think we're at 404.
yeah,
I mean, he's going to be netting on his corn, what was it, 65, $70 an
yeah,
acre.
I think that's what you said, yeah.
And then I got a guy who bought it on soybeans last year. He locked in 12.95. Well, today we're sitting at 10.02. I think he's going to be netting like 80, $85.
Basis come out of that, Logan?
No.
No basis.
And then how about your yield? I mean, you're not going to have an outstanding yield in Otter Tail County, just average yield is what you're projecting.
I would say these are, thanks for bringing that up. So these are all based on just price today.
Right.
And that's if the county comes in, Otter Tail's projected at 165. That's if the county comes in at 165. If we come in at 175, obviously those payments go down.
Sure, yep.
Okay, I know you know the answer to this question, but I'm going to tee it up for you. Okay, so if you take margin now and we get to sales closing in February, can you take ECO or SCO?
So you can take it. It's like I had a guy last year, he took margin on his corn and ECO on his soybeans. You can't put them on the same crop. So if I take margin today on my corn, I am not buying ECO on my corn come March.
Okay.
But you can buy it by crop. Like he had ECO on his beans, margin on his corn. That's
Okay.
100% fine.
Love that idea. So
guys, we talked about 3 plans, some complexity to all 3 of these plans. So what helps you, I guess, as far as, explaining these to the customers? What do you use?
When it comes down to it, Keith, I mean, you're going to get a feel for it with your client just because the producer, we're kind of in a culture shift with this because guys are just used to coming in, doing their multi-peril renewal. Probably 90% of the time we're taking the same coverage, okay? All of a sudden we're taking this in, and we've tried to kind of include this in the conversation over the last few years. But I think we're going to talk about it even more, and I think with Logan's slide, especially on ECO, with the increase in premium support with that going up 21%, That's a big deal, you guys. I think, and knowing where we're at on the pricing, I mean, by what we've seen by what RMA keeps releasing for what yield per, what the possible yields could be for this year, I don't think we're going to see any increase in prices by the way the yield expected
Right.
yields
Yeah,
are coming
absolutely.
in at.
Big
So,
bushels are coming, right?
yep, big bushels are coming. So, and again, you take that for what it is. It's just, they're kind of just throwing things out there until the rubber meets the road. I mean, we don't know what those prices are going to come in at, but it doesn't look good, and that's why we think these types of plans might have some. Did you guys get that? Okay, I just want to make sure. I didn't see anybody taking notes, so.
Did you lose your train of thought?
No, not one bit. So, no, again, just, this is really, when Keith Logan and I decided to take this on, again, the area plan thing is, I really think our producers really need to look a little bit harder at it. Again, ECO with it getting the increase in premium support going up to 65% is a huge deal, so.
Yeah, and I know part of the question was how do we talk to customers on it?
Yeah.
So like this slide right here, the one that shows how you trend with the county, this is just one of the few tools that we have. I know when you're sitting in the crowd, I mean, there's a lot of moving parts to these things and they sound difficult. But we have it's a lot easier to describe it for me if I'm sitting at my desk and have my computer. Because we have a simple calculator that shows how the county's projected to do, what the county's done historically. And you just turn the tool around and the customer throws what numbers in this calculator they want to see. And that the tool pretty much describes how these policies work itself.
Yep.
So we're at a question and answer part of our program here. So any questions out there? No one in a green shirt can ask a question.
Or from NAU.
Yeah. Any questions from the audience?
Again, we don't want to seem like we're trying to sell this to you. This is really an informational piece that I truly think you need to look at this year, especially with, again, with the decline in prices. I mean, going back to those first numbers I talked about, I mean, just in 1 year, we've had $140 in reduced revenue just based off your base policy. How do you make that up? I mean, obviously a hail insurance will help you with that, but area plan coverage, especially like Logan described so nicely with margin and ECO, if you have a price drop, a lot of times that's going to help trigger these area plans.
Yeah.
So, yep.
Good.
Yep.
You have a question over here?
Yep. Oh, yeah.
Yeah, the last couple years with how much these prices have declined, these policies have paid out a lot.
Price drop, why would I take it now?
Yeah.
Keith had a great point on that because you're actually on margin. You're setting the price now, and if we do see a price drop in the spring, all of a sudden you locked in price back here. So I think that's a big part of it.
Yeah, but
Right.
Yeah, but
Yep. So will it be 3 next year? It's price protection. You're protecting yourself against further decline in that price.
Yep.
There's a lot of moving parts in where that price is determined based on the world economy.
And if you look at, I mean, historically, if you look at what the harvest prices have been for insurance, because that's what these policies are based off of, what the December price comes in at. For corn from, what was it, 2014 or 2013
Correct.
to 2018, that 5-year window, we were anywhere from 360 to 405.
Yeah.
I mean, if we set a 440 price today with margin and all of a sudden we see 370, 380 next fall, probably going to be happy that you had the plan.
And part of his payout, I know that seems really, I mean, it doesn't seem like that big of a deal, but when these payments get paid out, there's no basis taken out of it. So when guys are marketing their crop at this point, they're getting hit pretty hard on basis. So if you can collect an insurance payment that doesn't take that out of it, that's just more money in your pocket. So,
Other questions?
Howard, nothing? No, I thought for sure. No. Wait, we can let Howard
we can
ask a
yeah,
question.
there you go.
Sure. Yeah. No, nothing.
If there's any information you need about these plans, stop into one of our offices.
For sure.
We'll talk to you about any one of these plans, before harvest, after harvest, and we'll just walk you through what we have as far as our tools and give you some information so you can make an informed decision.
Yep.
As we know, prices are going, well, we'll say down a little bit, and we want to make sure we're protecting your input costs.
Right. Spot on.
Like we said, margin's got a September 30th sales deadline, so you got about 2.5 weeks to get that.
Yep.
ECO and SCO is March 15th.
One quick thing, like you had asked the question about margin protection, and it was your boy you said that ended up getting a son-in-law that got a payment. The thing, again, like ECO, SCO, margin, that the thing with margin, it kicks the can down the road even a little bit longer before a payment's determined, because of, Logan had that grid up there that showed all the input costs that are taken into consideration. Those have to be tabulated before they can release these payments. So a lot of data that needs to come in. Again, the harvest price is part of that deal too.
Right, right. We just need to move that production reporting date up.
Yeah,
So.
that series, and that's been in, I think they're discussing that as well, aren't they?
Yeah, they discuss it every year. I don't know if
Yeah.
it ever gets acted on. So.
So, okay.
Well, very good. Thank you, Joel. Thank you, Logan. We appreciate it.
Thank you,
Thanks,
Keith.
Keith.
Appreciate it.
Yep.
Thank you.
AgCountry offers a wide range of internal growth. If you have a goal in mind and you put your mind to it, your successes can be endless.
There are so many jobs within this company that you can rotate into.
I like challenges. AgCountry gives me challenges.
Yeah, AgCountry is a great place to work. There's plenty of flexibility. You're never tied to your desk. There's a team here that is always there for you.
Yeah, grab your role and run with it, and always be aware of the opportunities because they're in front of you.